price movements, whether it's the market indexes or an individual stock price, are based upon investor sentiment. Investor sentiment has been anticipating a breakthrough of the 20,000 mark in the Dow. That is the media's criteria. However, looking at the candlestick chart, we can much better analyze what is happening once we got up to this level. Stochastics being in the overbought area, and if you understand what happens with investor sentiment, the longer it takes for them to break through the 20,000 mark, the more discouraged investors become. So the price or the trend of the market isn't based upon fundamentals. It's based upon the investor sentiment. And if it's people are getting discouraged at this level, that it's not going through the 20,000 mark, doesn't matter what the fundamentals are doing, investor sentiment will be changing. Now, does this necessarily mean that we're failing at the 20,000 mark? Right now, what it's telling us is it's not going through immediately. So we have a doji today, which makes our analysis of the market direction very simple. Because we know the simple rule of the doji, that they're going to move prices in the direction of how they open after a doji. If they open lower, we know we've got a bearish doji sandwich in progress, and that the failure near the 20,000 mark has occurred. There's going to be some profit taking. On the other hand, a positive open tomorrow and positive trading could cause that little scoop type pattern with a morning star signal at the end of a flat trading range. Telling you that should be the slingshot that could take things up through that level in the future. Gold prices have demonstrated they're coming back up through the T-line after a series of indecisive trading. And notice the very simple technique of candlestick analysis. Everything's in a downtrend, but where do most people sell? They panic sell at the bottom. That's the gap down at this level in the oversold area. Notice what's happened when it gapped down. There was our bullish harami telling us the selling had stopped. When was it time to buy? When we saw a candlestick buy signal and a close above the T-line. Closing above the T-line with a candlestick signal with stochastics coming back up after a series of indecisive trading is a good indication that this is where the bulls and the bears were fighting. Now they've told us which direction they're going. By closing above the T-line that had been acting as a resistance level, now we can anticipate this is our next target. That same analysis alerted us to kind of a scoop pattern, as we can see in Nugget, the ETF, 3 leveraged ETF for gold stocks. Notice how it's done kind of a scoop pattern with a big flat handle. Stochastics coming up, and what's our expectations of a scoop pattern? A strong slingshot effect to the upside. So this becomes one sector that we want to be prepared for getting into, especially going into the new year. We also can take advantage of big price moves, as we can see in CETX. The fry pan bottom is a strong indication that when they break out, notice how they gapped up over here on CETX, that we were having a strong price move. This is the expectation of what comes out of a fry pan bottom. Once again, it puts us into situations where not only is the direction very easily identifiable, but the magnitude of the move is very, very strong. That'll be it. We should be expecting a very good year going into 2017. So all we need to do is analyze which sectors are going to be the strongest. We'll see you in the chat rooms.